Hi, Shae Russell here, editor of the Daily Reckoning Australia, and I thought today we'd take a look at the retail sector, but over in China. Now, I'm going to give you the heads up. Before I decided to do this video, I had to convince my publisher that it was a good video to do. And here's why this counts. The reason why I look at the retail sector so much is it tells you where an economy is in its life cycle. And if you follow retail data and consumption data, you can start to predict recessions and a slowing down economy. Now, basically, the reason why I bring this up is one of the really good indicators to follow of what's going on in the retail markets all across the world is following luxury brands. Now, today's luxury brand that I'm talking about is LVMH. Now, I'm not going to try and pronounce the company name in French because my French accent is woeful. But for the first quarter, their sales were up 13%. And a large push of that growth is coming from China. Now, it turns out 20% of all sales for LVMH came from China last year. But across the board, if you take out Japan, like-for-like sales are up 21% in the Asian region. Now, this is a good indicator that things are actually going quite well for the Asian economy, in spite of the doom and gloom and in spite of all this debt that we do talk about that is infiltrating the system. Although that debt, as unstable it is another topic for another day. What this growth in the luxury market tells us, though, is that people are happy and that they want to spend their money. Now, in China, obviously, it is in part a wealth status and showing people that they have made it. But this trend doesn't look like it's going to end anytime in the next couple of years. And there's a couple of reasons for this. First of all, the average the average luxury good buyer in China is about a decade younger than the rest of the developed world. So somebody in China around 35 is far more likely to go out and spend $4,000 on a handbag, for example. Whereas we look at Europe, Australia, or America, the buyer is more likely to be 45 years old. So what China's looking at is a whole bunch of millennials that are willing to spend thousands and thousands of dollars on things like handbags, cognac, champagne, silk scarves. Basically, they want to spend their money on luxury goods that tells people how much they're worth. Now, the reason why I follow retail sales is when the markets are booming, retail sales obviously do quite well, but luxury goods experience a downturn before the rest of the retail sales do. So if you start following companies like LVMH, for example, or PPR, both listed on the French Stock Exchange, if you see their sales dip, that's starting to give you a good indication of where the growth in sales might be slowing down. But furthermore, there's another thing that makes me want to watch the Chinese retail sales a little bit longer. So I've tried to print this out. This is from the RBA's recent chart pack. So most people, when they gauge the health of the Chinese economy, they look for the manufacturing or the industrial production. They use that as a way to see what's going on. I like retail. So what we've got here, down the bottom here, is we can see that since 2015, retail growth in China has started to slow to an annualized range of about 8 to 10%. Now, what this tells us is that China is transitioning from a production-based society to a consumption-based society. Can it happen? We don't know. But the best way to find out if this is going to happen is to watch how luxury sales perform in China. It could take 3, 4, 5 years for this to play out. But at the end of the day, if we're going to see a slowdown in Chinese consumption, we're going to see it in retail stocks first and luxury goods foremost. That's all I've got for you today. As usual, make sure you subscribe to the Daily Reckoning so you've got our latest insights in your inbox. I'll see you later.